Hey guys, thanks for joining myself, Terry, and Mindy Mitchell with Service First Mortgage. And thanks for joining me today, Mindy. I really appreciate it. I want to introduce us really quickly. I'm with Home Smart Realty, and I've been with this brand new brokerage for the last year, and it's really growing like crazy and heading from west to east like gangbusters. So I'm just really excited about joining Home Smart over a year ago. And Min, did you want to share a little bit about working where you are now?
Sure. I work at Service First Mortgage. I've been here a little bit over 3 years, and we are a company that's in the top 5 for the Metroplex. So it's a pretty great company to work for.
That's awesome. So we have some really good questions I know a lot of people are asking when they start this process and looking for a home. And here's a few list of questions that you came up with that you feel like could help put people in the right perspective and the right process, especially for people moving out of their homes, going in to smaller homes or empty nesters or brand new home buyers. So you can pretty much help them with all of that, VA loans, etc. Correct?
Correct. I can help with various loan types, and I love helping first-time home buyers, and I love experienced buyers, and just helping them transition to a new phase.
Fantastic. Okay, so one of our first questions is, let me go here to our PowerPoint. If you need to reach either myself or Mindy, here's our information. So the first question is, of course I can't see because I have my little, can you see my little toggle thing down here?
Uh-huh.
So I'm trying to, there we go. So when beginning the home search or the buying process, how soon should I start the pre-qualification, pre-approval process?
I think it's a really great idea to start the pre-qualification process right away. The moment you're beginning to think you want to either, purchase a new home or refinance, whatever the case may be. One of the first things that we do is we check your credit report, and that way, in case something is on there that maybe is inaccurate, you would have time to fix it, so there wouldn't be any delays in the home buying process. So if you can buy, or if you can plan maybe 6 months out, is ideal. However, if you are spontaneous and just deciding, that you want to purchase right away, I would definitely, call me first and get pre-qualified.
And Mindy, don't you also find too that sometimes, especially myself as a realtor, when we're first starting at a particular starting point, isn't it good to know that once they talk to you, then I know as a realtor how to guide them as far as what their price range is, and that would be probably the best way to start, don't you think?
Definitely. I love our application process because, yes, it will ask for your monthly income. And then there are certain debt to income ratios that we must follow. And so knowing that up front so that you're looking at the right priced house is definitely important. That and the credit report are the two things that are so important to know up front.
Oh, that's fantastic. Thank you. Okay, and so our next question is, I hate that I have to go into the desktop here. Let's see. Little fumbling around here. What types of loans are there and which loans usually work best for the individual?
Okay, there are definitely a lot of different loan types, and that is also why it's so important to do that pre-qualification period, because then I would know if the best loan type for you would be, say, conventional, or if it would be FHA or VA. There's just a lot of different options, and each different loan type requires a different down payment. And so then we're able to kind of talk about like the fees and the down payment up front as well. Once I look at that pre-qualification application. And so Really, the loan program that will work best for you is basically just based off of your credit score, your debt to income ratio, and then how much funds you have to close.
You know what, Mindy, I've been asked too as a realtor, what are the specific paperwork that you need, like W-2 forms, your last 2 months of payment, are they all different, or are they pretty much the same specifications
Mhm.
for each loan?
Yeah, definitely. That's a great question. So basically, up front, it's really universal for any loan type, and that is 1 month pay stubs,
Okay.
W-2s for the last 2 years, current bank statements. A lot of times they like 60 days
Mhm.
of bank statements, and a copy of your driver's license and social security card. Really, that's pretty much the needed items from the get-go for all of them.
Fantastic. I really get that asked a lot, and sometimes I just don't remember all that's involved. So this is really helpful. Thank you. So let me go back to the PowerPoint again. The next question is, oh yeah, a lot of people are asking interest rates and annual percentage rates. What's the difference?
Okay, that is very good. So interest rates right now, I would like to throw in, are very nice, very low right now. So your interest rate is what your current mortgage principal and interest. And then the annual percentage is basically for the year, but includes like costs of the loan, such as if you do an FHA loan, there is mortgage insurance. So that goes part into the interest as well. And then there are some closing costs and closing fees. So that annual percentage rate takes into account everything that it took in the beginning to get the loan.
So when people are saying, oh, the interest rates are really low, which part are we looking at? The annual, or is it all inclusive?
All inclusive.
Okay.
Yeah,
And so
definitely.
do you find that compared to so many other years that our interest rate is fairly low right now?
Yes, right now, yes. FHA loans, the interest rate is lower right now, but conventional, I'm seeing all-time lows as well.
Oh, fantastic. That's great. Okay, so the next question is, I wish I could do this a little bit faster. Okay, how much of a down payment is required, and does each down payment depend on what kind of loan type you qualify for?
Yes, I love talking about down payment because some people still think that you need 20% down to buy a house, but that is not the case at all. So if you do an FHA loan, that is 3.5% down of the purchase price. And then if you do a conventional and you're a first time home buyer, it's 3%. And then if you've owned a home within the past 3 years, then on conventional, you would more than likely have to put at least 5% down. If you've owned a home recently. VA loans, it's zero down payment. So it really does matter which loan type is best for you for the down payment. If you would like to put 20% down, of course you can. And then that saves you on the upfront mortgage cost and the MIP.
I've been hearing also too a lot about the assistance down payment. Do you have to qualify for that? And is that for everyone, or how do
Yes.
you recommend it?
The down payment assistance programs are pretty awesome. You can get those, and basically, you do have to qualify. Your income has to be within a certain, percentage and range. And so, if you over qualify based on the income, of course, you couldn't get it. And you also have to have a qualifying credit score to get the down payment assistance. And if you've owned a home before, you can actually get down payment assistance as well. So it's kind of tricky that most people think it's for first time home buyers only, but there is actually a section for people who have owned a home
That's
previous.
good to know. Okay.
Yeah.
I think we
Yeah.
do have one more question. Let me see here. Oh, yeah, there's a ton of cost I know involved whenever we get prepared for the closing aspect of it. So, what are the things that we do need to prepare for?
Yes, I love this question because it's also one of those things that can be really confusing because you have your down payment, which is required by the loan type that we just talked about, and then there are closing costs. And closing costs are basically the cost to do the loan, for example, the title fees, the appraisal, the um, escrows is really the biggest portion of the closing cost. So really quickly, I'll tell you about escrows. So escrows are basically an account set aside for you with the servicing company that's for your property taxes and homeowners insurance. And every time you make your payment, the escrows are included in that payment. And so that way at the end of the year, your property taxes are paid for you out of that escrow account. And so basically, when you purchase the home, you're paying for about 3 months worth of property taxes up front and a year's worth of homeowners insurance. So sometimes people are like taken back just a little bit at the cost, the closing cost.
Right.
I like to just remind you that basically that's just your money set aside for you, the big bulk of closing costs. And so it's just like a little safety net for you so that you're not short on your property taxes or homeowners insurance. So you're always covered.
Fantastic. I don't think I have any more questions that came through. Let me just double check real quick. We appreciate that because I know there's a lot of questions that come in, especially when the closing, there's just so many steps to go through. But if there's any more questions that you guys might have out there, please feel free to contact Mindy or myself. We'll definitely guide you in the right direction. Mindy, I really appreciate your time today and being so helpful to a lot of the viewers out here that we always get as realtors a ton of these questions. So I'll be definitely looking back at this recording again to make sure that I'm well prepared.
Thank you so much for having me. And I definitely think the buyers out there should be contacting you right away to look at some new homes on the market.
Fantastic. Thanks, Mindy. Have a wonderful day.
You too.